I think people will be attracted to come into the lithium market again. It's a question of when does it start to move again? You're going to get through this cycle into the next cycle. Can you get financed at current levels? Can you persuade people that your thesis about price going up is true? And if you can, that's great. If you can't, then what are your options in terms of getting this thing financed? And once your DFS is complete. A lot of lithium companies are struggling to raise capital at the moment, and that's because of the impact on lithium prices over the last 12 to 18 months. We speak today to a European lithium miner who thinks they've got what it takes to survive where others won't. So to find out more, watch this video. We speak with Tony Sage. He's the chairman of European Lithium, and we talk to him about their strategy for survival or growth, depending on market conditions. Plus, we also discuss supply and demand arguments for the lithium market at the moment. Plus, he talks to us about their financing or need for financing once their DFS is completed, and at what point the business becomes economic. And we also look at the fact that they're listed on multiple exchanges, which interested us, and we found out which exchanges are working for them and which ones are not. So if you want to look at some of those topics, look in the description below, click on the relevant timestamp, and I'll take you to that part of the video. If I get asked that you click the button in the corner of the screen to subscribe to our YouTube channel, or to watch more videos like this, click the notification bell. So let's find out what Tony had to say. Good morning, Tony. How are you, sir?
Very good, thank you.
Fantastic. Now you're in Perth at the moment.
I'm in Perth, Western Australia. Nice and sunny day. I'm very happy here.
Glad to hear it. Glad to hear it. So Tony, why don't you kick off? Give us a 1 minute summary on the business, then we'll get into it.
Very difficult to talk about this unique project in 1 minute, but I'll give it a go. This mine was developed by the Austrian government back in the 80s. They were looking for uranium, found lithium. Unlike any Western company, they actually went out and built the mine straight away without doing all of the work that is required before you start building a mine. So they built it. There's over 1.5 kilometers of attics already built. What they did is they followed the lithium from the ceiling of the opening and just followed it all the way down. It is a beautiful structure inside the mine. But unfortunately, when we took over in 2012, there wasn't data to prove how they found it. So what we've done in the 6 years that we've owned it is mine it. So we did mine 1,500 tons, and we also drilled. So that proved, as all Western companies need, is a JORC compliant resource. So we know we've got 11 million tons of ore there. That will last 22 years as a mine life. And we completed in that time frame a PFS. So a pre-feasibility study has been complete. It was completed by one of the leading engineering groups in the world who do lithium, DRA. So in a very concise 1 point something minutes there, that's basically the premise of our story.
Okay, so if we may, can I get into how this has come about? Now, you're involved with Cape Lambert as well. Cape Lambert's a shareholder in this project. Can you just talk us about a little bit about the background of how this came about?
It's a very, very interesting background. It started off with a cocktail party. One of my colleagues met the count of that district in Austria, near Wolfsburg, and they got talking, and he introduced himself. He was in mining, and the count said, "Well, I've got a mine on my property," and that's where it started. So in 2012, we went and had a look at it and invested in that in his property. So we paid him a lot of money for access, and then over time he enjoyed what we were doing and became a shareholder of the company. I didn't have the funds myself personally, so I used my investment vehicle, Cape Lambert Resources, and we invested some money in. And since then we've got other investors in. But that's how it started. In 2012, lithium wasn't flavour of the month. In 2016, it became flavour of the month. So we kept it private for 4 years, and then we listed it on the Australian Stock Exchange back in 2016-17. Now, if I go back in history, did I make a mistake? I think I did. At the time, lithium was exploding around the world. But in Australia, there's 41 separate ASX listed lithium companies at the time. And a lot of those were in Australia, and some of those were in Africa, and obviously some in South America. So we were being drowned out by all of the Australian ones. So if you're an Australian investor and you say, I want to operate a mine in Austria, they will just say you're crazy. I mean, greenies, it just doesn't, mining doesn't happen in Europe. So by listing in Australia was an error of judgment at the time, but we got the money, we listed, and we were able to progress the project. But then in 2017, we listed it in Frankfurt, Hamburg, Munich, Stuttgart, and Berlin. And from that moment on, it exploded. The investor base moved from 100% Australian shareholders to now only 45% Australian shareholders to a 55% shareholding base in Europe. And most of those European shareholders are German or Austrian. There's a splattering in UK, France, Switzerland, but most of them come from Germany and Austria. So we realised we hit on something extremely good. If you look at a lot of the social media, our company is clicked a lot more than some of the bigger companies in Europe because of our number one, EV. Number two, it's a unique story that a mine is going to be actually reopened 20 odd years later in a little country called Austria. So it's been a fascinating background to the story when I first became involved.
Right, so let's talk about, well, let's get onto that bit first. I do want to talk about the management team's experience and so forth, but you're talking about shareholder and the split between Europe and ASX. Obviously, it's a European asset, so you'd hope that people would be interested in Europe. But just looking at your share price, lithium companies across the world have been absolutely hammered. The share price, in fact, what is lithium at? What's the price at the moment?
Well, it just depends which one you're talking about. What we're going to produce is lithium hydroxide. At its peak was $22,500 a tonne, and you're looking probably at $16,000 a tonne now. So it's dropped a hell of a lot in the last 12 months. The actual raw lithium price, I think, got to just over $1,000 a tonne. It's probably trading at $450 to $500 a tonne now. So that's halved. The hydroxide has gone down about 35%. Over the last 12 months.
Okay, and you've most of the numbers I've seen from you are at about $16,000. Is that right? The way that so the economics are there. So obviously that's taken a bit of a hit. Forecast is, well, what is the forecast? I've read various things from JP Morgan suggest it's going to go lower. So what do you think?
We look at benchmark, we look at Roskill, but we also look at the broader world, if you like. I mean, China's just announced they want to build 1 million electric buses. Now, you just think about the amount of lithium required for 1 million electric buses. So forecasters, when the slide started when one of the biggest producers out of Chile said that they were going to double production because they had an agreement with the Chilean government to increase their it didn't happen. Now but that was the initial scare. From that day that was announced, the lithium price actually fell about 15% on the day. Lithium stocks all around the world just went down 10, 15, 20% because they thought all this production was coming on. Number one, that production is not coming on. Number two, you've got countries like China who are now announcing that they're going to build 1 million electric buses. And now there's not enough lithium around today to produce those 1 million buses in the time frame they want.
True, but
so the price will go up.
You're projecting that. Okay, so I think like most supply demand stories, there's two sides to it. Okay, so we accept that the demand is probably going to go up because the whole EV story. Okay, but likewise, as soon as the demand goes up, new entrants come into market, or people are, production which is sitting idle at the moment or on a very low level, it goes up. Again, JP Morgan would suggest that there's going to be double the amount of production out of South America alone into the marketplace. So that is going to affect pricing, right? So it's a question of where it settles. So the production is not going to stay as is. That would be insane. I think people will be attracted to come into the lithium market again. It's a question of, can they do it economically? And we've spoken to a lot of lithium businesses. Like, you're right, I think ASX is a bit of a dirty word at the moment because people have lost, they're underwater. Let's put it like that.
Correct.
It's a question of, when does it start to move again? You're going to get through this cycle into the next cycle. Can you get financed at current levels?
I think we can. I wouldn't be pushing ahead of spending already 12 or 13 million on the pre-feasibility study to spending another 10 on the definitive or bankable, unless I was very confident. We've been in discussions with project financiers, quite large ones, European based. What you've got to understand is the broader geopolitical situation. You've seen it now with rare earths.
Mm-hmm.
China has said to the world, we're not going to export any more rare earths. At the moment, China produces, I think, over 80% of the cobalt required for EVs, and I think 85% of the lithium for EVs. Now, if they're going to build 1 million electric buses, and of course with their cars and obviously battery storage, how much time do you think, or how many batteries do you think they'll be exporting in 10 years' time? So the EU has made lithium and cobalt critical minerals. There's only a few players in Europe, as you probably know, in our space, that can produce in Europe. 25% of the world's lithium ends up in Europe. They produce none at the moment for electric batteries.
Let me understand the terminology. You're saying critical, meaning that it needs to be produced from within Europe, or have they got the ability to go and buy out in the wider market?
Well, okay. Let's go into hydroxide and carbonate production. All comes from China. They've built one plant here in Western Australia. Mm-hmm. Who owns it? The Chinese. At some point, like they have done with rare earths, they could say, for their own critical needs, that they can't export any more lithium hydroxide or, if for that matter, cobalt hydroxide or cobalt carbonate or lithium carbonate. At some point, it might not happen, but the security countries like America and Europe as a whole needs to have is some production in their own backyard. Ours isn't going to nowhere near create the supply that is needed by BMW, Volkswagen.
Right. Are you, sorry, again, sorry, just to understand, are you saying that, are you talking about production or are you talking about processing?
I'm talking about production of lithium hydroxide or carbonate in Europe.
Right, because it's a fairly abundant resource, isn't it? I mean, that's kind of the problem, right?
It is, but mining it economically is the key point, right?
Yeah.
So it is abundant everywhere. So, for example, we just take Pilbara Minerals, for example. 4 weeks ago, they were in big trouble. They got rescued by the Chinese because the price has fallen down, because they're in a remote location. We're in Wolfsburg, right near the railway line, 40 kilometres from Graz, where Samsung have a battery factory. So we're in an industrial area in Europe where we can export to any country in Europe by train for very little, compared to having it from Australia or South America, shipping it to China to get produced in China. Then all China does is buy it for 450 to 900 a tonne and sell it as hydroxide at 16,000 a tonne to battery makers in Europe.
Okay.
The EU have recognised that. They've recognised it with rare earths. They were scared by the rare earths announcement by China from 2020, no more export. So they're madly, as with the Americans now, madly trying to find rare earths. But it's the same problem that will be with lithium, hydroxide and carbonate. Forget the raw stuff. I mean, there isn't a plant in there isn't a plant in Chile that produces hydroxide or carbonate. They ship the raw product to China to get the hydroxide.
So you're saying that Europe is coming up with these protectionist policies to be able to produce and process their own lithium in their own backyard versus buying...
Policies, encouraging policies, encouragement for European mines to be able to produce hydroxide carbonate for the European market.
Well, that's what I'm getting at.
It's an encouragement.
An encouragement, and again, we'll talk about the the funding program launched by the German ministry, which you mentioned in there in a minute. But if I'm a giga factory producing batteries, I'm going to go to the cheapest supplier, aren't I? I'm going to go to the South Americans, right? So how do you stack up against that?
Well, number one, the freight cost. I mean, we're not paying $22 to $25 a tonne to ship it from there to Europe, number one. Number two, if you look at and read our pre-feasibility study, our cost structure is very, very good. I mean, I think the numbers is 6.5 to 7,000 US a tonne, whereas 12 months ago we could have got 22 for it. Now we can get 15. It's still a very, very big margin of profit, excluding financing costs, for our shareholders. So we believe we can produce for European market a safe, green, very green supply of lithium hydroxide to the European market without any problem with geopolitics. If the suppliers, for example, I think we saw 7 months ago, the Argentinian government slapped a tax on, I think it was 10% or 12% on every export, including lithium. So if you're a lithium producer in Argentina, you've just dropped 12% of your profit.
Yeah, but they're also producing at $3,000. So they got some margin, lowest quartile producers, right?
Well, in Chile they are, in Argentina not so, but in Chile, yes.
Okay, right.
But Chile is very environmentally friendly.
Meaning what?
Well, they're producing theirs from brines, which takes up a lot of water and which is causing all the grief with their local population. And they don't want any of those mines to be increased because of the amount of, and if you've seen a brines production facility, it's pretty ugly to the environment. So environmental, ours is all underground. So we can get a big green tick and we're producing hydroxide for EVs or other environmentally friendly industries. Right. So I think we get number one, a big green tick. I think number two, with the German car manufacturers, for example, I think one got into a bit of trouble investing in some cobalt mine in DRC for fear of.
Yeah, well, that's kind of well trodden path with regards to cobalt and DRC and child labour and so forth. So, but let's stay away from that. Let's get into this. So, what I want to understand is, how does your project get financed today? I know you did a raise earlier in the year. The terms of which, if I just talk about that, what are the terms of that? It was $10 million was mentioned, but it was a bit more complicated than that, wasn't it?
Yeah. So it's a financing facility that we can draw down on, and it really depends. It's complicated because it depends on the share price at the time. They get a 10% discount to the market. Okay. So we're trading at 10 cents, they get it at 9 cents, and they don't do it all at once. So we've got the facility there; they can do it when they feel like it. So we've only drawn down on that facility $2 million. And we've got $8 million.
And you can draw down in $1 million tranches upon conversion of the notes from previous rounds. That's the way that works.
So when they finished selling those, if you like, to recoup their money, we can then draw down the next one.
Got it. Okay, so it's a real stagger. So it's not $10 million per se. It's a facility, as you said.
Yeah, it's a facility, and it can last 3 years.
Right. Okay. So let's come back to financing, because that's a bit that fascinates me. Is at $16,000 or $15,000, you've shown what the economics are here for you. But if I'm a banker, which I used to be, I'm discounting that. I'm discounting the today's price by up to 40%. So it becomes a question of, can you persuade people that your thesis about price going up is true? And if you can, that's great. If you can't, then what are your options in terms of getting this thing financed? And once your DFS is complete.
Yeah. Well, number one, the DFS will say whether we're robust enough. Okay. So if the DFS comes out saying, Tony, this is a very marginal project, I wouldn't go to any bank with this, right? That's one scenario.
Yeah.
We're expecting the opposite because the pre-feasibility study was very robust. So I'll have a very robust DFS. So I go to the bank and I will say, this DFS proves there's a 40% margin in this. How much can you project finance this? They will say this much. We will seek some EU funding, whether it's a soft loan, whether it's a...
Tell us about that. Tell us about it. You talk about the German ministry putting a battery production funding program together of €1 billion. That's quite a lot of money, but how much of that would be applicable to you? Not in terms of the quantum, but how much of that billion would be set aside for mining per se?
Unknown. If we, for example, link up with a battery manufacturer as a joint application for use of these funds, it might be a larger number. As a miner, it's by itself. I don't think we would be able to do it by ourselves. So we'd have to link up with maybe an end user. I'm just throwing out names. I don't want to pick an automaker in Germany or a battery maker in Germany. Right? We could partner up and then apply for that. But separate to that, there's EU funding. It's called Horizon 2020. And under that, there is a direct application for us as a critical mineral for Europe. We may be able to get a soft loan or maybe a grant. We don't think a grant, but a soft loan. So that soft loan might be 50 million euros at a very attractive interest rate, which is probably almost zero, repayable over X amount of years.
So that would be in the shape of what, equity or debt? Sorry, debt. You're saying it's repaid. Sorry, yeah. And that's
debt. So at the same time, say the number is 400 million that we're looking for, US dollars.
Okay, I will.
We would do it probably 70 million of that in direct equity, and the rest in project finance and or funding from a source like Horizon 2020 or the 1 billion fund from the German government.
How does someone like Horizon assess your project?
Credibility?
Well, credibility, I'm sure it's fine, but the economics of a project like this.
Well, the credibility will be in the PFS that's already done and the DFS that's coming. So that's where the credibility for Horizon 2020 as a government, semi-government payment place, I suppose. I don't know what to call it because I'm not an EU savvy, but we would have to present a case to them that number one, it's very good for Europe. Number two, it will create jobs in Europe. Number three, it is green. We're not going to hurt the environment by doing what we're doing. They're the three key criteria in the Horizon 2020. We tick every one of those boxes.
It's interesting that none of those criteria are about the economics. It's what's...
No. Again, it's about creating jobs. I mean, if you look at virtually any government around the world, it's not really about economics. It's about creating jobs. I mean, this is a fiscal investment by the EU into something that's going to create jobs and solve a problem, albeit in a small way, of producing a critical product for the European industry.
So
rather than being reliant on China.
So potentially that type of money is quite important because it's, I'm not saying dumb money, but it's money which has a different set of values or needs from, say, institutional money who does care about the economics because they're buying shares in your business, presumably on the equity side, or want some guarantees that you're going to be able to mine economically and pay back the debt. So that would be, have those conversations been had? I mean, how do you know the Horizon 2020's interest in investing in something like you?
Well, because we've applied and we've talked to the right people at the right agency, and we will await the outcome of the DFS. I mean, they've got a stringent program as well. They just don't, you call it dumb money, but that wasn't my phrase, but they just don't hand it out. We've got to have a document that shows that we will be economic, we will create jobs in a low job area, especially for the youth near Wolfsburg in Austria where we are. So that would create long-term 300 or 400 jobs, short-term 1,500 during the construction phase. So we are going to create jobs in that. And if you go to the local government in that area, we've got two sets of competing mayors who want us to build the plant on their side of the fence. So we've got so much support from the local government. We've got so much support from the Austrian government. So now it's one step higher, which is the EU in total, and they've got so many other factors to look at: geopolitics, which we've touched on, environment, which we've touched on, and most important, jobs.
Yeah, most important for them, but I'm talking about shareholders wanting to come in and
Yeah,
invest
yeah. But if
in
we
you
get
guys,
that, if
right?
we get that money, that's a big chunk of shareholders will go, wow, that's great. That's 50 million, 70 million, whatever it is, the number solved.
Yeah,
How are you going to get the other 300 and something million? So
exactly.
70 of that's going to come direct equity, whatever the
70%.
share price is at the time.
Yeah.
Yeah, 70 million. So that's, what's that, roughly 25% of it. We've done the numbers with banks, what they're looking at for the project finance side, and they can project finance probably 60% of the project.
Sorry, let me get this. Sorry, I want to get the numbers right. It's say 400 million required.
Yeah,
You're getting potentially, let's just say for the sake of argument, 50 million bucks of debt from Horizon on a 70-30 equity debt equity split, right?
after that.
Yep. Okay. Okay.
Yeah.
So I'm just trying to think, as a retail high net worth or family office person saying, looking at your company and going, I think this is a great story. I'm going to invest. How do I feel about Horizon 2020 coming in? I guess if they're putting 50 million towards the debt, great. But it's still costing the company whatever, I don't know, whatever nominal rates that these people charge, near zero you're suggesting. That's great news. Do I look at that as some kind of endorsement of the project? I guess not, in the sense that it's about job creation and is it green, etc. So I'd need to sort of see who else would be involved with this, I think is what I'd be thinking. So have you talk about advanced stage discussions with some of the offtake agreements
Yep.
as a means of, would that be pre-funding in terms of the offtake? I mean, who are the names involved with this that kind of give me some comfort around the validity of the project?
Well, we've signed NDAs with these companies, but rest assured they're large German automakers and builders of batteries themselves is another company. And let's go for one other one, which was in the industry of producing electronic tools,
Right.
if you like. I can't say names, but that's the sort of industries we're talking about. Now, the reason I don't pre-sell the offtake now is once this DFS is done and people see how robust the project is, you've got other suppliers around the world that, oh, here's a foothold into Europe. So if we've already sold our offtake pre the DFS, we won't be a takeover target.
Okay.
If I don't, and the DFS comes out, here we are. There's a small player in Europe. It's only going to produce 11,000 tonnes of hydroxide per annum, but they're in Europe. They've got all these contacts. Wouldn't it be great to have in our portfolio? So if we'd already sold the offtake, it's very much more difficult to have that story. So I'd like to be in a position where we're completely transparent. We've got no offtake partner now. We don't want one now. And we will wait until the DFS is done. And we can sign 4 agreements today if I wanted to. And a couple of those are outside of Europe. But I don't want to sign one now for that reason.
Okay. No, I appreciate the insight into the strategy and the thinking. That's well noted. So if I look at the project now, $16,000, which is what you've done the numbers on, and let's say it's roughly give or take that on any given day at the moment, you've got a 25% IRR, which is reasonable. Anything over 20%, you got to be pleased with. But you're right on the margin then in terms of price in the market at the moment. So you're looking for this price appreciation to drive not only the IRR but the NPV of this project up. Are there institutions that you're talking to with regards to, or you've begun conversations with in anticipation of what the DFS is going to tell you?
Yeah, we've got a couple of institutions already in the stock. They bought through the last equity raising we did. So they're sitting back. I'm going to be completely honest now. Virtually everyone, the 2 major banks, European banks, and 2 of the off-takers want to wait for the DFS. The Chinese obviously don't care about they've seen the PFS, they know it's right, they will sign but we don't want to send concentrate from Austria to China for $400, $500, $600 a ton, and it comes back into Europe at $16,000, $17,000 a ton. So we can take easy money now and breeze through the next 6 months, or we can hold tough like we have, be true to what we want to be able to do, is finish the DFS, get a very robust DFS, and then go to the two major banks that we've talked to and say, right, this is it now. You've asked us to be our clients. Can you raise X amount of dollars on this IRR based on this final report from DRA?
Oh, so those are investment banks as opposed to
yes,
debt providers. Got it. Okay. And I guess the current investors are going to be very different from the types of investors you're looking for going forward, aren't they?
Absolutely. Yeah, completely different.
Yeah. Okay.
At the moment, we've got in Australia we call them mums and dads. In Europe, they're called family houses. So we've got a lot of family house investors in Europe, based in Austria and Germany. Yeah. We've got a little bit of investment now that we're listed back in London on the NEX, and a few have come in through that. The reason we did that is to broaden our investment spread of investors from Europe, and a lot of family houses in London and a lot of municipalities can't invest unless you've got some sort of listing in London. So we chose the NEX because it was the quickest to get on. And since we were on, it doesn't trade very well because most of the family houses buy on the Frankfurt Exchange, where we trade millions and millions a day.
Yeah. No, I understand that. I guess it's cheap and quick on NEX, but doesn't necessarily, as you say, trade or give you the volume or liquidity you need.
Correct.
So how much cash are you sitting on?
1.7, 1.8 million in the bank right now. Our next drawdown is 1 million, which should come through by the end of October, halfway through November. And that will continue. So in another 3 or 4 weeks, we can draw down another 1 million.
So they let you know. They let you know how they're doing with regards to selling down.
Well, we see it because they have to come through us to convert their shares, right? So we know, and we obviously got the register, so we know when they're selling.
Okay.
So we know when they'll.
Okay.
So we're okay for now. Would we want a different funding partner? Maybe. So there's lots of different options on the table. We're not going to say we're stuck with this one, but this one will suit us for the time being until we finish the DFS.
Right. Okay. So, I mean, just you mentioned a second ago, part of your strategy here, which is, you don't necessarily want to take off-take partners on board yet until you get clarity on the DFS, because then you'll understand what your options are. I mean, what else are you doing with regards to saying, look, you're a small lithium player, global player, okay? You're in Europe. That's a USP for you, or you're positioning it as such anyway. But what do you do? Some companies choose to hunker down till this price discovery, the price gets back up to where it's going to go, or some people like charge on 100 miles an hour, or some people JV. What's going on with the board's thinking here? I mean, what are the things keeping you awake at night, Tony?
Well, the biggest one right now, believe it or not, is again geopolitical, because everything affects everything in this world. I mean, Trump's fight with Xi Jinping, everyone should be worried about. The whole world should be worried about.
Well, really. That's why gold's gone up.
Yeah, I mean, $1,500. I mean, I've been reading reports over 3,000 an ounce by mid next year. So, I mean, I don't know the answer to that, but if I'm thinking purely of business, that is my number one concern. China already has proven with this rare earths announcement that it will try and hold the rest of the world to ransom if it doesn't get its way. Trump is belligerent on the other hand, and he wants his way. So look, that negotiation is very, very important for a lot of things in commodity prices around the world. So that's one thing that keeps me awake at night. I think part of the reason that the US now says, I want to buy Greenland, because they know there's a hell of a lot of rare earths in Greenland. So that's just one, maybe a parody or joke from him, but he's quite serious about getting investment in Greenland. And I think now, with the Australian Prime Minister going to visit Trump, he's come out and said we want to really be involved in lithium, cobalt, rare earths, with anything to do anywhere in the world with any Australian company. So geopolitically, I think there will be a resolution coming up, whether it's in Trump's favour or Xi Jinping's favour, China's favour, who knows? But that will settle a lot of the nervousness. You'll see gold maybe come down a little bit, but I think everyone then will think, well, China's ready to go again. We just saw the spurt in iron ore prices, for example. Let's just pick that one. It went from $60 a tonne back to 125 because they've got rid of their stockpiles, right? And they needed it very quickly.
Yeah.
If there is some sort of resolution, China will need to fiscally spend money again, and that will increase the iron ore price. But that goes on to other things. If they're building 1 million buses, they still need iron ore, but they still need lithium. So I look at the whole of the world and think about things that can happen, cannot happen. For the board, we've got a very good project in a very good country. The government of Austria wanted to go ahead. The local government there wants to go ahead. We've had no environmental issues come for us. I mean, being in Europe, you see every time there's a new mine set up, there's greenies everywhere trying to stop it. Ours is not like that. It's all underground. So I think we're in a unique position to go ahead, finalise the DFS, have a document that we can present to project financiers, institutions that will take chunks in an equity raising, and obviously go to the $1 billion fund people out of Germany, and also the Horizon 2020 out of the EU. So I'm looking forward very positively, and I believe that the lithium price will start to move upwards from January next year.
We shall see, I guess. We shall see. I think lots of people want to see some sort of movement there, and and then it's a case of what happens next. Do we get a slew of lithium miners coming into market or not? And how do you take advantage of your unique position in Europe to be able to capitalize on that? Look, Tony, that's a great first introduction to the companies. We tried previously to catch up. I think our travel plans didn't coincide. So,
thank you very much.
No, appreciate your time. Thanks very much.
No worries.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.